Hey traders, this is Blake Morrow with Traders Summit, and once again with me, and it's been a long time, I have Oscar Salem from BCM Partners. Good to see you, Oscar. How have you been?
I've been doing well. Thank you for having me again, Blake. Been busy, but busy is good in our business, right?
Yeah, busy is good, and the markets have been volatile. You know, it's one of those things when you and I first started meeting, sometime in 2021, maybe over, a year and a half ago, volatility was low. Now we got volatility, and that's great. It's great for business. It's great for us that trade and for the community, the Trader Summit community at large. So, a lot's happened since we last spoke, and the dollar continued to strengthen. We've seen stocks rebound quite nicely off the lows the last couple months. What do you make of where we're currently at in the markets? What's really got your attention right now?
So several things, right? Obviously, the dollar. We're looking thinking a lot about the dollar, where it's headed, where risk is right now. Risk is at a critical juncture, we think, right now, in general terms, right? If you look at the indices in the U.S., the SPOOs, the NASDAQ, the futures, even the Dow, it's been a fierce correction, right? From the lows. I think this is a corrective wave, so we can label it a wave C or a C wave, which typically is very violent, and this is what we've seen. But we're not front running this. We want to see confirmation that it's topping out, maybe opening small shorts here and there. But once we confirm that this is indeed a corrective wave in risk, then we could go all in and start shorting a little bit more aggressively. It seems that way to us, and that is a driver. Obviously, looking at the bond market, we do think the bottom in bonds has been set, and now we think that bonds are going to rally. But I think critical juncture in risk markets, and everything that's correlated to risk, including the dollar, obviously crypto, and everything else that comes with it, right?
Yeah, it makes sense that stocks are getting to levels that become a little suspect considering the current environment, and I mean with what the Fed's doing. Let's talk about how you feel about the Fed, about quantitative tightening. I know we're on the heels and about a week and a half away from Jackson Hole. What are your expectations with the Fed moving forward, and what do you think is going to happen with rates?
So unfortunately for Jerome Powell and the Fed, financial conditions have loosened quite a bit, right? Since they tightened pretty aggressively, now they've loosened pretty aggressively. So my take is that he's going to be a little bit hawkish in Jackson Hole, right? That he's going to have to be hawkish to tighten what's loosened. He doesn't want this, right? He understands that his mandate is basically to tighten conditions, to get inflation under control. And the markets have basically ripped on his face, right? They've rallied against his will, basically, right? So I think he's going to be hawkish. I think that the market has to believe it. He sent a lot of the talking heads out to jawbone this, to make sure that people understand that these guys have an inflation mandate. Risk is relentless, right? It's rallied.
Yeah, so as we head into Jackson Hole and you start listening to whether it's Jerome Powell or other Fed governors, and even other central bankers from around the globe, I suspect feel that they're going to continue to march around a hawkish rhetoric. So how are you going to express that in the markets? What are you show us what you're looking at in the markets? I'd love to see your charts. You talked about a wave count in the S&P. Love to see how you're going to express that idea in the markets, and how can we as traders capitalize on it?
So let's look at the S&P first, right? Let me share my screens real quick, and these are loose counts that we have. Let me see if you can see that.
I can see. Yes, I can.
So according to this count, right? And again, every count that you see is very subjective. Everybody has different ways of looking at the market. We are in an aggressive C wave, right? This aggressive corrective C wave that is getting to levels of prior resistance. Unfortunately for traders, it's very, very difficult to predict when a wave like this is going to stop. So you have to wait and be patient and wait for confirmation to see when a wave like this will stop. This to me seems corrective, seems like a corrective wave, but really, until you see it topping out and you see 2 or 3 candles on the daily reversing and forming a consolidated pattern and then turning lower, it's going to be very difficult to front run this, right? So I think it's patience right now, but I do like to fade a little bit, maybe carefully, take a little bit of risk here from the short side, but be very, very quick. One of the charts that we do really like are the dollar charts here, and I'm going to show you two. First, let's look at dollar rand. Right, a wise guy told me this. A very savvy veteran trader told me this weekend. I was chatting with him. You have to look at longer dated charts to see the trend and then break them down. Right, so I see a trend in dollar rand. I think the trend is going higher. Right, so I break down this trend into what I call fractals. Right, so
and by the way, Oscar, I don't think you and I spoke this weekend. Just
no.
I just
Oh yeah.
I just can't. I got you. I probably got some people at home too. Continue on.
Yeah, no, it wasn't you. He was a little bit older than you are, a little bit more veteran than you, more gray hair, not so long. But anywho, so I break this down and I see a level here that I'm interested in, right around 1620, 1625. I want to be a buyer of dollar rand. We bought a little bit. We're riding it higher. We're going to continue to add to this trade because we do think that the upside here is important, right? We think that the upside could break this prior highs and continue to go higher. Obviously, we know where we're wrong, right? We know where we're wrong, and it's close to this level here around 1610. You would have to reconsider this trade. Another dollar chart that we like is that has a little bit of beta as well, is the dollar against the Swedish krona. Right, we posted this chart on our site on August 10th. We got long here at 10:05, 10:06. We like this trend. Again, there's a legitimate count here on a fractal with a trend going higher. Today kind of gave back a little bit. This candle's a little suspect, but we think that this has momentum to continue higher. We think that the dollar will continue to go. Now, obviously, we trade around a long core position, and we like to go in and out and trade, manage our P&L that way, right? But we continue to favor this long. We think that the dollar against high beta could do well. We like to express it against the rand and against the Swedish krona. So those are two trades that we have on right now.
So based on what you're telling me is that you believe that stocks are going to start to show some weakness here in the next couple of weeks, and let's say it might coincide with the Jackson Hole Symposium, and then to express that weakness, you could be short S&Ps, or you could be long dollars, and the dollar is going to benefit as a risk aversion beneficiary. Right. Is that correct?
Right, long dollars against high beta. Obviously, we're going to have to wait for conviction from the Fed. I think that what's happened with markets has happened despite the Fed not wanting this to happen, in my opinion, right? So I think that you're going to see a little bit of a hawkish tone from Jerome Powell and Jackson Hole, since financial conditions have loosened quite a bit, right? We've seen a very big rally of the lows. And in spite of what the Fed is doing, right, which is tightening financial conditions, hiking rates. Now they're going to start with QT. So in spite of all that, you've seen this rally. Obviously, markets are forward-looking, but this has been a fierce rally off the lows, right?
Yeah, it sure has. You mentioned just a minute ago that you were looking at cryptos too. So what's in the crypto space that has your attention right now?
We look primarily at Bitcoin and Ethereum, but let's look at the Bitcoin chart, right? We like this chart. We like to, and I'll show you why, right? So this is one of our favorite patterns. When you see what we call an ending diagonal, or this type of wedge into a prior low, right? It's now a resistance level. This looks to me like a good fade. right? Obviously, nothing is a guarantee, but if you look at this structure, you know that you're going to be wrong above this line, right? That prior low, it broke down. Now it's wedged higher, right? It's been a grind higher, forming this ending diagonal. So we're short Bitcoin. We are short. We're trading it from the short side. We think that if this breaks, we could have a quick drop in this asset. So I favor this from the short side. I like being short Bitcoin at these levels. We've sold a little bit, and that has a lot of beta to risk, right? So we look at risk in general terms, right? We look at risk as a whole, because I do think that capital markets are a big flow chart of capital, right? There's one big overarching theme, one big trade out there, and this is a way to express risk off, right? And the level is, I think pretty actionable here.
Yeah.
So we're short. Obviously, we know where we're wrong. We've been short. We're in the money a little bit now. If we think that if this breaks down, if these levels break down and this structure breaks down, you can see a quick, sharp drop to the base of it. So, we'll take it up around 19 and a half, 20,000.
All right, Oscar. Well, I'll tell you what, I like the way you're thinking. I like how you're viewing the markets, and I want to say I appreciate your time here at the Trader Summit community. If you're listening in at home, make sure you're giving Oscar a thumbs up, subscribe to the channel so you don't miss any of this exclusive content. But Oscar, how do I follow you around as a trader? If I'm like, who is this Oscar Salem guy, and who is BCM Partners? How do I follow your work?
So I'm very active on Twitter. So my handle is @Bellhos, BELLEHOS, which is a play on my kids' names. And we also have our biscuitcapital.com network, where we post all our trades. We posted one trade earlier this morning for our subscribers. We post all our trades. You can see all our track records. You can see everything we've done. And that's on our website, and obviously on our Twitter handle, my Twitter handle, which is @Bellhos on Twitter. We're pretty active on both.
Awesome. Well, I want to say, Oscar, it's always good to catch up with you. I enjoy our conversations that we have, and we need to make this happen a little bit sooner than every few months.
Agreed. And I owe you some articles, so I'm going to start getting busy on the writing side as well, so you can have my thoughts on paper.
Great. And if you guys are following along on tradersummit.net, you'll be able to find that written content from Oscar and other contributors as well. So, Oscar, I want to say thank you so much for spending your time with us today, and I'll talk to you soon.
You bet, sir. Thank you for having me.
Hey, traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also, click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.